Eric Mwathe for the weekend of January 18th, 2014. Let's take a look at how the markets ended Friday's session. We're looking at the Dow slightly up about 0.25, Nasdaq slightly down 0.50, S&P 500 was down about 0.40. We see that gold had a nice session, and that's how we ended Friday's session. For the week, we see that the Nasdaq was up about 5.5%. The Dow was almost unchanged for the week, up 0.13%. And we see that S&P 500 was down for the week about 0.20%. Right now for the year and for the month, the S&P 500 still remains down for the year, about a half a percentage point there. And we see that the Dow is also down for the year, about 0.71%. And look at the Nasdaq, which is up for the year, about 0.50. So that's how the markets look like on a long-term picture. If we take a look now at the technical aspects, let's begin by taking a look at the Nasdaq Daily, and we can see that over the last week we've made another higher high in price, but we see that the technical picture has not followed through at all. So that negative divergence is something we need to keep watching. Could be signs of a market that is getting tired. Also, if you take a look at the hourly for the Nasdaq, same development here on the hourly. We made a higher high in price, but the technical picture was not following through there. And also you'll note that the previous high here, which is this high, and what we do is we do a straight line here. We see that the market stalled around that level there. So it makes sense that the market is pulling back. How big of a pullback we're going to get at the end of the day here, we don't know. If you take a look at the MACDs on the hourly, we see that we are back below zero here, and a crossover here probably could push this thing below zero. When both of them are below zero on the MACD time frame, then this is when you expect the market to be on a bigger decline to the downside. Take a look at the Dow Daily, and on the Dow we see that we are still holding above that 50-day moving average, and all markets we're still holding above the previous breakout level. So the Dow continues to be healthy. You see where the 50-day moving average is trading, and even if it continues moving higher and the Dow stays above the 50, the market continues being decent here. It's just that the hourly charts, if we take a look at the Dow hourly, you start seeing that the Dow formed a double top right there. I hope you can see that. Seems to be a double top here on the hourlies. Could suggest that we open the trading week after the weekend here with the market pulling lower. You can see here we hit this level twice. So this has been confirmed on the hourly. The price channel resistance, we see that we have RSI resistance there, double top. So more than likely the market is shaping up to want to go down as we go into the new week. We'll see what happens. The Dow from a 30-minute chart, and you can see here very well defined channel here. Right, we hit that at the highs of the day on Friday. Also take a look at this here. We hit that line here again at the highs on Friday. So that's where the market is trading. We'll see whether this is enough to really push the market lower. And as you can see that our MACDs, one of them is starting to coil to the downside here below zero. Otherwise the other one looks healthy as of right now. So you know, for me that's especially if you just try and keep it simple, that right there, the top lines, and also the top lines on the RSI on the hourly, suggesting a market that wants to pull back. Dow Transports, and I hope you can see that it's on the daily here, higher highs, and you can see the technicals are not following through. We are making lower lows on the RSI. That could be a sign of trouble here. Take a look at the S&P 500 daily. and you can see here we are trying to make higher highs. The technicals don't look that good as of right now, so we expect this market to be looking like it wants to get tired. It's not yet broken yet, as you can see, because the MACDs remain above zero. So as long as the MACDs are above zero, it's very hard to bring down a market. S&P 500, from an hourly basis, you can see that we tried to break out here but failed above previous hourly closing highs. So that was a failed breakout. Failed breakouts are notorious for taking the market lower. You can see negative divergence. We made a higher high here that did not hold. We made a lower low in the technicals on the hourly. Also happens to be the break point. This break point here, draw a straight line here. You see that we were rejected at the confluence of those two lines. So that could be where we see this market pull back. On the hourlies, we'll see what happens. Let's take a look at the Russell 2000 daily. And we're looking at this chart here, confirming top line resistance right there. And we've been banging heads with these top lines here for quite a couple of months here. So we'll see how this continues being resistance. And you can also see we made a higher high in price there, a slight higher high in price, but the technical picture was lower. So that negative divergence could be a reason why this market pulls back. Now, earlier when I made a comment on Twitter about how Twitter itself was trading, and you can see that on the hourly, my reasoning was that it was going to pull back from the highs of about $64. Reason being that this is where it broke down previously. So this break point here, draw a straight line from that level, and you can see when we opened this morning, we hit that line, and I thought that could be resistance. Turned out to be short-term resistance. We'll see what happens from here. For this stock to do well, it needs to break out above that resistance level on the hourly. If you take a look at another popular name, take a look at the daily for Apple here, and you'll see today's action does make sense, because if you draw a straight line, you see that the break point from the recent high was here, which happens to be this high here. Draw a straight line from that level right there, and you can see we had uniform action above the line there, and back below that blue line happens to be that nice high. It's a place to get short, and again we hit that line and were rejected, another place to get short. So we'll see what happens, whether this stock can break out. You can see, you can argue there is a top line resistance there, and also there's a bottom line resistance here. So the stock is trading now within this, close to the end of this trend here. Either we're going to get a breakout here or a failure, and the stock goes down. Also, if you take a look at the hourly chart, you'll see that if you draw a line connecting the highs there, like that, you see that it made sense that there was resistance here. And also, if you take a look at the RSI, we've been stalling around this level here recently, even going back a couple of months. This level here, we stalled during that break there, which was this high here. We stalled here, which was this high on that blue line, and we stalled here coming into Friday's action. So that makes sense. So again, there seems to be some type of a channel here connecting the lows on the hourly here, this low and this low here. Draw a straight line, and you can see we're going to be trending here. One way, we either break out or we break down. Now let's take a look at the VIX to see what the market is trying to do here. And if we take a look at the daily, you see that seems to be some type of support here based on the lows on a daily closing basis. There was a daily closing low there, the lows there, daily closing low. Draw a straight line. You see that we found support somewhere around here. It will not surprise me to see this thing trying to work its way out of that. Also, the RSI seems to be showing some type of a support here. As you can see, support on that line and also on that line. And also this blue line here that I'm drawing has been where it's been finding support. The last time it found support there was this general area here, which was this lows, and we had a short spike in the VIX and a pullback in the market. If you take a look at the hourly, again for the VIX, you see that the only time it moves is when it breaks out of a range like it did here, and then this spike had a down bearish channel here, a bullish wedge. It finally broke out of that and had a nice run. Did the same thing here, broke out, and you see now it needs to break out of this channel here before it can do anything in terms of moving higher and pushing the market lower. So we'll see what happens at the beginning of the week. Otherwise, hourly charts do seem to indicate that the market could be in a pullback mode. Otherwise, wait and see what happens. By the time Monday, Tuesday rolls around, we're going to have some confirmation whether this analysis is correct.